Hey everyone, welcome to the Walk to Wealth podcast. If you're tuning in on YouTube or any of the podcast directories, we just ask you one teeny tiny little favor. Make sure to follow us so we can keep on bringing amazing guests like the one we have on today. Without further ado, we have a very special guest in front of us today. Brad, for anyone that may not know you, tell us your elevator pitch. Who are you and what do you do?
Hey, John, thanks for having me here. So I focus on raising capital for large commercial residential properties. I've been in the real estate for 20 years, but the last 5 years exclusively focused on raising capital for commercial deals. And I'm doing that as a licensed securities broker. So that gives me a couple different pros and a different platform than what might typically be thought of as a capital raiser. But yeah, definitely bringing a lot of experience and a different angle to it than what I generally see out in the marketplace. But it's for me, it's a fun role.
Yeah, definitely. And before all the capital raising, before the big commercial deals, tell us a little bit about your walk to wealth. What was it like during your childhood, your upbringing? Where did this story all begin?
Okay. I mean, going back that far, man, I'm number 8 of 9 kids, and my dad was a high school teacher, so things were tight. It was never like there wasn't food in the kitchen, but it was you had to. We weren't getting name brand clothes or find the latest pair of Jordans or anything like that. But somewhere along the way, I had this idea, like, I want to make millions. I want to see my name in Business Week. And I'm like from small town farm country, Utah, right? Like
Yeah.
I want to see my name in the Wall Street Journal. I had this idea, like, I'm going to make it out of here. And how I was going to do that, I had no idea. But I was selling chicken eggs. I was selling golf balls. I was doing everything I could to like just build. My dad and I actually built a pretty good landscape business. So I had this idea, like, I could put together some business idea. Finally, somewhere maybe high school, I got the idea of real estate. I'm going to do this through real estate. I read a statement somewhere that more millionaires have been made through real estate than anywhere else. So, okay, I can do this. So I went to college to do a finance degree with a goal to get into commercial real estate. And that's what I did my internship in. Did an internship in between my junior and senior year with a company up in Seattle that was wheeling and dealing skyscrapers and shopping malls internationally and domestically. It was a blast. And I loved it. I came back from that, finished my senior year, and life took me down a different path. I ended up staying with a small little company there that I worked with my senior year, and it ended up being a good move for me, but different path than I had initially intended. But even though it was a different path, I still was able to stay involved in real estate. We started doing some vacation rentals before Airbnb was a thing. We were doing them in cool touristy towns back east. We built a hotel and a retail cafe that I was able to help raise funds for and be involved in every aspect of that development and construction. And then after we sold that company back in 2009, my wife and I moved to Texas, and I started doing some more of the typical, more residential type of deals, fixing and flipping, wholesaling, etc. And did that for a while and realized, man, why am I doing this?
Yeah.
I don't like this stuff. And so it was kind of this, what do I want to be when I grow up kind of a moment. And it was, oh yeah, commercial real estate. How do I get involved in that? And that's what led me to my role today, where I've been focused on since 2017.
Yeah, you brought up some pretty interesting points around in your story that I kind of wanted to ask you around before we really get into today's conversation. The first, you mentioned selling chicken eggs. So when people talk about entrepreneurship, it's the lemonade stand, it's the paper route. You were selling chicken eggs. Can you tell us a little bit about what was that like?
Yeah, man, I grew up, I would say it's a farm, but we had 6 acres, had a couple horses, a bunch of chickens, turkeys, a goat that thought it was a horse. And we lived on a pretty busy road. So it was the idea of, hey, we've got all these eggs, we've got extra eggs. And my mom was a piano teacher, so people would come to our house. So I could just put up a sign on the highway, the side of the road there in front of us, and we have chicken eggs available to sell pretty much any time of the day, or people could do self-service. My mom's piano students would bring their empty cartons, and while they were doing their piano lesson, I'd go out to the coop and fill it up and come back. And I can't even remember what I charged, $4 or $5 for the dozen or whatever it was back then. Maybe it might have been more like $2 a dozen.
Yeah.
But yeah, I remember going to the store, the IFA store, and buying some chickens from their catalog. They get shipped to your house, which is kind of funky. Like, little live chickens show up to your house, live chicks, raising those, taking care of those. And that was one of my first ventures.
Yeah, amazing. And then tell us a little bit about your story of in college when you went to the internship, you came back and life decided to take a switch of plans, right? And a lot of the times when we're young, we're starting off early. It's like we want to get into something and then we get into something new, and shiny object syndrome kind of takes us over and stuff like that. So it's kind of hard to navigate the road when you're young because there's so much opportunity, so much potential, so many things you want to try out
Right.
and do. Take us a little bit through what was it like during that time when you realized like, hey, maybe this is something that I need to do instead of what I originally planned. What was that kind of like navigating during that time period?
Yeah. It was such a cool experience. It was, again, being a small town kid. That was my first time living in a big city,
Yeah.
working downtown Seattle, had a blast, going to the Mariners games, doing the big city stuff, and realized like, this is where I want to be. I want to be involved in this kind of stuff. And I got assigned like a section of a spreadsheet for my 3-month internship. I don't know how much value I provided to them, and I certainly didn't get deep into the weeds. Didn't give me a whole lot of leash, but it was just really fun. I did realize though that there's a lot of people, and that who knows, the first 5 or 10 years in that industry would be just heads down in spreadsheets. I came back from that, and I felt like I had earned a pretty good amount of money for that. I knew I had enough money to make it through my senior year, but I didn't want to be idle. And so I went and got another student job just to get me through my senior year. And I
Mhm.
was employee number 2 in this online retail store. And it was, 2001. So online was still relatively new. This idea of online
Yeah.
retail, that would be kind of cool. I'd love to learn more about online retail as well. Just the internet is this new thing. And so I went and started working with them. And by the time I graduated a year later, we had grown that thing pretty well. We were doing several million in revenue. I had a chance to buy in as a small junior partner, and we started doing some cool stuff. When I graduated, we were still in the after effects of 9/11 and still after
Mm.
effects of the dot-com crash. And so the job market was just not great. And I was getting some interest. So the offers I was getting were, again, they were like, you're going to get a line of a spreadsheet to focus on. And I was
Mhm.
coming out with a finance degree. The plan was work for 2 or 3 years and go back and get my MBA. So then I could get into one of and I wanted to go to Thunderbird down in Phoenix, which has a strong international real estate program. That was the plan.
Okay.
But I needed that 3 years of job experience before they would accept you into their MBA program. And so I was looking at finance. I was getting offers from finance departments in like a Sears and a Payless
Mhm.
and Walmart kind of places. And again, just sitting in a cubicle, looking at a single line of a spreadsheet. I was like, man, I'm doing some cool stuff here. I'm running this little company. We've got 10 employees at this point. I'm kind of running every little aspect of this almost. I didn't know I just didn't feel that excited about sitting in a cubicle and staring at a spreadsheet.
Yeah.
Um, and so I think it was definitely a function as well of just the job market wasn't that great right then. But for both professional and personal reasons, it ended up being a good move for me. Shortly after I decided to stay there, we launched a magazine. I had a chance to get a bigger slice of the company. Over years, I had a chance to buy out some of the other partners until I got to a point where I owned more than a quarter of the company. And the last 4 years
Wow.
there, I was the president of it until we sold it. So it gave me a ton of hands-on, more detailed experience than I would have gotten in a cubicle farm.
Yeah, and that's
So it ended up being a
amazing.
good move for me.
That's amazing. And then you ended up finding your way back into commercial real estate, which is a great segue to get into today's conversation a little bit. Commercial real estate, it's something that's not really ever talked about. Everyone usually talks about buying hold, fix and flipping, family rentals, Airbnb, stuff like that. But most of that stuff, a lot of the times when people are speaking on it, especially on podcasts like this, it's always in the residential space, 1 to 4 units. And you're doing things in the commercial space, which is anything you're technically speaking over 5, I guess you could say, but you're dealing with a much larger property. So my first question I want to ask you to start this conversation off a little bit is why commercial over residential in terms of getting started in it? Because you got started in it pretty early on. Most people think you have to get into residential before you get into commercial. You kind of just skip the residential and went straight into the commercial side of things. So what kind of made you choose that decision there? And what advice can you give to anyone that's looking to get into real estate and doesn't want to do the residential side of things?
Yeah. I don't know that I would say I skipped it, because even while I was with that small company, I started buying some rentals.
Okay.
Um, and had the rentals, the primary ones I was buying there in Utah were ones that I lived in a condo, bought it, lived in it for a year, and then moved out and bought another one and piled them up that way.
Hmm.
But then we were doing those vacation rentals as well. But then we started doing some, we bought a couple of cabins up near Park City and rented them out for family reunions and that kind of stuff. And it was really fun. It was a good taste of what was the potential out there. When we moved to Texas, I didn't really know exactly what angle to go. I knew smaller stuff. And so the idea of, but I didn't know how to find fix and flip opportunities. So I actually just went and signed up with a coach and got some basic training on how to do that stuff. And I realized, man, okay, you can make money in that, but I really don't like this idea of yellow letters and door knocking and whatnot. It was just not really what I wanted to spend my time doing. And so then it was, okay, I like the idea of the more sophisticated elements of commercial. And again, it's everybody pick your poison, but real estate, residential is a little bit more grungy, right? You're door knocking, you're networking like crazy. You're the yellow letters, you're dealing with the contractors, you're dealing with the tenants who might be ripping the copper out of your walls. Commercial is just a different level of, it's more business. It's more, okay, you're buying a cash flow. You're buying a spreadsheet as opposed to a management project. And so you're right. The technical definition of commercial in residential is anything over 5 units. So we clarify that by saying large commercial. Generally, we're looking at properties with 150 units and above. And the attractiveness of that is, I don't care where that's located. I mean, I care where that's located, but it doesn't have to be right? I can get a set of financials from a property in Georgia and analyze it. My house here, I now live in Idaho. I can analyze it from here. No, okay, that's an attractive deal or it's not. And I can get a really good idea of whether I want to pursue this thing from Google Maps and talking to the broker, as opposed to if I'm going to go buy a duplex, it's a much different conversation. I want to walk through that myself. I'm going to go, I want to be able to go drive by it on a regular basis. And then as far as the operations go, when you're talking 150 units and above, you can hire professional managers, meaning people whose full-time job it is. They work in the office right there on site. You've got a full-time maintenance person. You can afford to go buy a 40-foot container of materials from China and have them stored in your warehouse. So it's just a different level of sophistication and professionalism than you can generally find on the residential. And so that aspect plus the economies of scale just make it, for me, a much more attractive proposition.
Yeah, definitely. And so one question I wanted to ask you a little bit too is, because things are, as you said, a little more sophisticated, a little bit different how things are run, what is some of the lingo that people use when in this commercial space? Because a lot of times people throw in like NOI and cash on cash return and your cap rate and things like that. They throw in all these buzzwords. Can you break it down? What are the basics? Anyone that's interested in commercial real estate doesn't really know what anyone in commercial real estate is talking, because we all speak our own languages. Right. Can you break down what is some of the lingo that people should look into understanding, so that when they want to get into the commercial space, they could kind of hop in and pick up these conversations with people as if they already were in the industry?
Okay. I mean, that being said, for sure, real estate, especially commercial, has its jargon. But one of the reasons I really like real estate is it's not rocket science. I'm never going to be the smartest dude in the room. But real estate is a pretty simple concept to understand. That said, the jargon, the most common one you hear in commercial real estate is cap rate. And that can be confusing when you get into it. But basically, the simplest definition I've heard for that I like is, what would be my return on this property if I were to pay all cash? It's what is this property generating compared to what's going on in that local market? The other one that you hear a lot about is IRR, internal rate of return. It's not perfectly equivalent with an annual return. It's pretty close. So it's just, and again, a little bit just more of a sophisticated way to analyze what can I expect this property to generate on a return basis year over year, but taking into account the present value of cash and some equity events as well. So IRR is going to just be a little bit more sophisticated way to talk about an annual return. Why? Of course, that's how commercial properties are valued. Where for me, I consider it a pro of commercial versus real estate, where in residential, your value is determined by what did your neighbors sell their house for most recently, right? It's all about the comps. Where in commercial, it's about a business. How much net operating income is that property generating? And then there's a multiple of that, which is the cap rate. And that tells you how many dollars you can sell that property for, or what you should pay for it. And so it's, you when you buy a commercial property, you can to an extent control the value of it by how well you operate it. What upgrades are you going to do? And in exchange for doing those upgrades, how much can you increase the rent? Can you implement a trash pickup, Amazon locker service, any concierge service? Can you get a bump in rents for some fenced backyards or the dog park or a nicer clubhouse in the common space? anywhere you can increase those rents comes right to will impact your NOI, which then means you can sell that property for more. And so you don't have that level of control with a 1 to a 4 unit type of a property. So yeah, so those are a few: NOI, cap rate, IRR. Those are kind of the basics that we talk a lot about. When we're evaluating a deal, we're always going to ask for the T12, which is just the last 12 months of financials, cash flow, expenses, the rent roll, who's currently in there. Let me see the leases. We want to get an idea of who's actually in these places. So the T12 is, you'll hear a lot about that, but that just means it means trailing 12 months, the last 12 months of the financials on that deal. That's critical for evaluating whether that deal makes sense to purchase or not. I think those are the core ones though.
Yeah, because now that we got a little bit of the jargon out of the way, fighting, right? Structuring a deal. All right. I know that when it comes to at least the residential space, usually, as you said, you go by the comps, your neighbors hold for this, or I'm going to offer this, and hopefully you might get some closing costs, things like that put towards the closing. But when it comes to structuring a deal in a commercial space, what usually goes into structuring a deal and underwriting a deal? Because a lot of times you're dealing, as you said, with these bigger properties.
Right. In its essence, buying an apartment complex, 100 units to 400 units to whatever, it really is most similar to a fix and flip in residential. What we're doing, we're going in there, we're trying to take a C+ property and turn it into a B-, and then sell it later on for a significant gain, just like we do in the fix and flip, in the residential fix and flip model. But to get when we're buying 200 units, it's a lot harder to come up with that down payment than for a duplex. So it normally takes a group of people coming together to make it happen. And when we put a group of people together to make a deal happen, we call that a syndication. And a syndication just means a group investment. But by having a bunch of people come together, that means that we now have to be worried about the regulations of that deal. You've turned it into a security. So you have to make sure you structure it legally correct. But just like in residential, the bulk of the money for the purchase is going to come from the bank. There's going to be a loan to buy that property. It's 75% of the money coming from the bank is not uncommon. We try to be a little bit more conservative. So maybe more around 60%. In this current environment, we're lowering our loan amounts to around 55%. And then the rest of that money for the down payment, which would essentially is the down payment, comes from the investors coming together to pool their money to have enough funds there to be able to get it to the closing table. So you've got the bank, you've got the investors, as well as what's called the general partner. That's the person who found the deal, structured the deal, has invited all these investors to come to the table to participate in it, and is going to manage the managers. So those are the parties to the deal, and the bank is going to do their underwriting, and they're going to poke every hole in it they can. Just like buying a house. But unlike residential, they don't care if you're going to go buy a house for yourself to live in, they want to look at your bank statements. They want to know where did that last deposit come from? Nope, you can't get any help from grandma and grandpa, mom or dad. That has to be your money in your bank account for 6 months or whatever their requirement is. In commercial, they don't care where the down payment comes from. It can be from one person or from 40 people. But of course, they're going to underwrite the heck out of it. And so that's just the fact that the bank is underwriting. They've got the biggest stake involved in the deal. That can give you an added level of comfort. Plus, the general partners have it's their job to find it, source it, do their due diligence, and make sure this is a good deal before they take it to the bank, before they take it to their potential investor partners as well.
Yeah, amazing. And so now that we kind of understand, or starting to understand commercial real estate a little bit more, what would you say is the most practical way that someone can get, and not the easiest way, right? Because everyone loves taking the easiest way out. But what is the most practical route that someone should take to get into commercial real estate? Is it going to residential kind of like you and building up your portfolio a little bit and then eventually transferring into it? Is it just getting a job and then trying to come in as a limited partner and then getting into your own syndication deals? What would you recommend, even to your younger self, if you had to play it over again? What would you recommend to someone of a practical way to get into commercial real estate investing on these larger commercial deals?
Okay. I don't regret the deals I did in residential. I mean, I definitely had some bombs, right? I had some fix and flips that didn't work well. I tried to fix and flip for long distance. I was living in Texas, flipping a deal in Pittsburgh. That went horribly wrong. But lessons learned. And it was valuable lessons for me. I built up to the highest I got was 17 doors that for my own personal rental portfolio. I've sold most of those. I'm now down to 7, which is over 2 properties. So that said, if I had gotten into commercial sooner, I'd be much further ahead. And what held me back was the idea that I wanted to do this as a lone wolf. In residential, you can be a lone wolf, right? You can find your own deals, you can source your own deals, fund your own deals, or you just go get one funding partner to knock it down, or a hard money loan, whatever. You can do that. Commercial, it's a team sport. You've got to have multiple players to find the deal, to source it, to handle the investors, to handle the bank, to manage the manager. There's just a lot more roles that have to be filled. And so I would say for somebody who wants to jump to commercial, you do not have to do the residential stuff first. It's valuable lessons to be learned there, but you could jump right to a 10 unit, 100 unit with the team sport element. So it's finding a partner, finding a mentor, getting a job as an acquisition specialist, as with a commercial broker, to learn the jargon, learn some of the ropes, build up some relationships. And so you just have to leave that idea, doing everything by yourself, to teaming up. And in that teaming up, you can, advance your career so quickly. I'm just thinking about the difference for me, what I've been able to do in the last 5 years as I've teamed up on the commercial side with other partners versus what I did in the previous 15 as a lone wolf.
Yeah.
I just wish that's the only thing I would change, is just being willing to buddy up much sooner.
Yeah. What mindset shift do you have to put into place? Because a lot of times when, especially being younger, right, it's hard to ask these people because it might be a little intimidating, or we don't know what you don't know. So if you don't know, what questions do you ask, right? Because you just don't know anything, right? So it's like,
Right.
What mindset shifts do you have to put in place, and what things do you have to learn? Finally start incorporating that team element into doing things. Because as you said, you want to go fast, go alone, right? You want to go far, go together. And you've been able to do a lot more in the past few years with your team than you have in all the other years of residential real estate investing on your own.
Yeah. For me, the idea of taking other people's money and putting into these deals was scary. I didn't feel like I had like anything special to offer, to be honest. Here I was, a finance degree, internship in this, all the commercial raising experience, doing all these deals that we had done. But I felt like I don't know anything. I don't know a ton about this stuff. I see other people who know so much more. They're way more sophisticated. Why would somebody trust me with why would somebody write me a check for 50 grand or 100 grand to fund my deals? And the mindset shift was, dang, I actually have quite a bit of knowledge. I have quite a bit of experience. So I'm talking to somebody who has the ability to write a large check. They might be great at what they're doing, but they don't know real estate. They might have made a ton of money from their business or their dental practice or whatever they're doing, but they don't have the type of real estate experience I do. And so that was the mindset shift for me, was I actually do have quite a bit to offer to somebody who wants to be involved in real estate, doesn't know the ins and outs, doesn't want the daily in and out of managing it. And so just seeing, what you bring to the table there, it's easy to compare yourself to the people you see on Twitter, the people, yourself, such a podcast, something like, hey, okay, that guy knows everything. But if you take a moment and compare yourself to the average population out there, man, you where you're sitting today know a ton, right? I'm talking to your audience here, a ton already that you could provide value. Your services could provide a lot of value to other people. That said, I'm not saying go run out and ask people for $100,000 check unless you've got skills to back that up. And that's where a team could help be the part that backs that up, so that you could go knock down larger deals.
Yeah. And so when it comes to building a team, what role would you say someone who really doesn't have the knowledge or the skills of the money role would you see best fits them, generally speaking? You mentioned something about being an acquisition specialist, right? What kind of roles would someone in, let's say, my position kind of fulfill if they were to try and join a team or start a team?
Yeah. In the residential space, we talk about bird dogs, right? That you might have somebody who just goes and knocks doors all day long, or helps you send out the letters or whatnot. In the commercial space, we're always looking at what's the MLS of commercial. There's two CoStar is the primary one, and LoopNet is one that you can look at as well to learn about. But then you see that posting, and you see it's posted by a commercial broker. We need to get in front of that commercial broker and build a relationship with that individual, so that we're on that broker's buyer's list.
Yeah.
And so it's a lot of time spent building relationships with brokers just to get on their on their deal flow. So unlike in residential, where you might be doing a little bit more direct to seller, direct to the owner effort, in commercial, it's that happens, but it's much more rare. Most of the deals go through the commercial brokers. And so you've got to get on their radar. And so the outreach to those brokers, following up with them. Hey, we're looking. Hey, this deal I just saw you post on LoopNet doesn't quite fit my criteria, my firm's criteria, but if we're looking tweak this and tweak that, and we'd have a winner. Do you have anything like that? And so it's a lot of just pounding the phones, following up via email with commercial brokers to get on their radar. And somebody with very limited experience could jump in and help. And we would call that an acquisition specialist. You're helping us get in front of these brokers. That person could deliver quite a bit of value without having to be the one with the money, without having to be the one with the experience, but just being able to speak to brokers in a professional, knowledgeable way to make sure we're top of mind for them when they do have a deal that they're ready to blast out.
Yeah, you mentioned several times throughout this podcast, right? A concept of a team and relationships and building the relationships and the importance of that. How important has networking been in your commercial journey?
It's big. It's a little different from the experience on the residential side, because the most important networks are with those commercial brokers, with the lenders. My role where I sit, I partner with several different operators.
Mm-hmm.
And that was really part of where my journey was a little bit unique, was when I decided I wanted to get back into commercial, I started calling the brokers and asking them about their deals and trying to talk with them like I knew what I was talking about. And along the way, I was able to meet a couple of folks there in Austin who had a very similar journey to me, and who had started to develop relationships with operators who already had those relationships with the brokers and lenders, who already had their operations teams built out and relationships with the property managers, but they needed help raising equity. And I thought, man, I can do that. I know people with money. I know real estate money. If I can combine those two. And so for me, my network is now, my primary efforts in networking is networking with people with funds who have money ready to invest, maybe more funds than they have time, and who want to be involved in real estate, but don't want the hassle of managing it. They don't want to they don't want to be landlords, but they want the tax advantages and the returns that come from owning real estate. And so now for me, my networking efforts are strictly with, I've got my operator teams well established. I've got my fundraising team well established. I'm out there trying to build relationships with people with dollars to invest in these types of deals. So yeah, I mean, whatever angle you're coming from, networking is just, it's never going to go away.
Yeah, definitely. And so let me ask you then, right? Whether it's networking or whether in the commercial, you end up finding yourself in, a lot of us may find ourselves starting as an acquisition specialist, but what skills would you say are the most important to find success in that commercial space?
It's that the willingness to learn is step one. And that's going to be ongoing. I still learn a lot, even just hanging out on Twitter and following the RE Twit bros, going the conversations happening there. I learn a lot from there. It is a hustle game. It doesn't have to be for decades. You can hustle for 3 or 4 years and build up your pretty significant income, and that you can slowly grow from there. But it's like the coachability, the personability, it's a much smaller market than residential. So your reputation is going to be huge. You screw up one deal, and it's going to be much harder to recover from that, because word gets around. Say you can close, but then don't. Brokers talk. And so if you contract on a deal, you end up not closing it, you're going to have a hard time getting back on buyers lists. And so you've got to have that follow through. Those are just a few thoughts that come to mind, but pretty basic stuff though. It's doing what you say you're going to do and being a likable guy in your own way.
Yeah. And so let me ask you then, right? So we kind of talked the majority of this conversation about how to get into it, the basics, the fundamentals, I guess you could say. What does the grass look like once you get to the other side? Oh, I wouldn't word it that way. Once you start flourishing a little bit, now that you got this going a little bit, what does it look like? What can people look forward to once they find some success in this area and they stick with it long enough to enjoy the fruits of that success?
Yeah. On these deals, the people that do make the most money are the general partners, the people who have sourced the deal, structured it. The downside is that they're always looking for the next deal, and they are managing the managers and dealing a little bit more with the responsibility of the asset. That said, those dollars they're bringing are life changing. A couple of deals that you're able to close. I mean, if you're talking 200 unit, 300 unit, a couple of those deals can set you up for life. They're truly meaningful. It's really remarkable and amazing the impact that can have on an individual's life. where I sit focused primarily on the capital raising side, for me, it works out really, really well. I've got a couple of young kids. I've had some life experiences that for me, I'm not the guy that wants to work 60 hours a week. And this isn't an industry where, no, this is an industry where you can make it a 60-hour week. But the operator partners I work with, they're not that type of those operations. But even from there, for me, we're not blasting out dozens of deals a month. We might blast out a deal or two a month. So it's gone through so many levels of due diligence from the operators who are sourcing, looking at hundreds of deals. They bid on 10, they win one. And then we look at it. Okay, does this fit our investor community? Is this something they would want to invest in? Do we feel like we can bring in significant capital to this deal? So then we make our judgment call as well. And if it passes our requirements, we send that out to our investor database. And from there, I'm just kind of taking orders, helping investors place their capital. And then I'm following up with them in between, serving as the liaison from the operator to the investor with the monthly reports, answering their questions as the deals go along. And so for me, a lot of my day to day is simply just in the conversations with our investors or potential investors. And I can do that from anywhere. I can, as soon as we're done here, we had a snow day here in Boise today. So as soon as we're done here, I'm going to go out and sled with my boys. And we'll go on a nice Christmas vacation. While I'm out on vacation, I'm going to have some investor conversations in current investors and prospective investors. And I can do that from anywhere. And so it ends up being a nice lifestyle where you don't have to crush yourself for years and years and regret the time you didn't spend with your kids or whatever.
Yeah, definitely. And I kind of wanted to ask you, what does it look like being a general partner, right? Being a guy or gal or group, usually it's a couple of general partners that are running the show. What does that kind of look like? What does that take? And how would one, especially let's say, as I said, you get started as an acquisition specialist and you start graduating into different roles. Let's say you wanted to go off on your own. And once you got some experience, what does that take? What does that look like?
Yeah, that's pretty frequent where somebody, you end up working for a general partner for a number of years. You get the knowledge, you have some of your own relationships, and then you peel off to set up your own shop. That's fairly common, to be honest. And again, that's simply, you've got to have those hundreds of deals coming across your desk that you're going to do at least a preliminary run through to see which ones make sense for a little bit more detailed analysis. And then with the ones that do make sense for you, you've got to have some level of confidence in having the financing support to be able to knock that down. And if you've got that support there behind you, then you're going to submit an offer to that broker for that deal. And you might submit 20 or 30 of those offers before you get a broker to call you back and say, hey, you're in the running. We're ready we want to enter into negotiations with you. And so it's a lot of effort before you even just get that first deal and you get a fish on the hook. And so now at that point, you're going to go full blown deep due diligence where you're going to walk through every single unit and order up the inspections and yada, yada, the whole thing that goes into that. So that if you win that deal, again, you've got to have the bank loan. You've got to have all the investors come together for that to provide the down payment capital and the operating capital to do the improvements that you have in mind. Once it's secured, the general partner, they're the ones responsible for executing the business plan. What is it you saw in this deal that made you think you can do these improvements and take the rent from $1,200 a month to $1,400 a month? What warrants that $200 jump? And so you're now responsible for executing that business plan. You also hire the on-site property management. That's going to be likely just contracted out to a third-party service. And then again, these are large operations that do this. Some of them are public companies. That's all they do is manage large commercial properties like this. So you source that. So they're just dealing with the daily rent resets, the tenant requests, the helping people renew their leases, yada yada, the walkthroughs, et cetera. But you're managing the manager. So you're looking at those reports on a daily basis. How are they doing? How is that team performing? Do you need to make any changes or tweaks? And then ongoing reporting to the investors, ongoing distributions to the investors. So you're calculating those and sending those payments out. And then the general partners are going to make the decision when and whether to sell the property. So they'll be running that side of the conversation as well. And so it really is, everything hinges on the general partner being sophisticated, intelligent, forthright, and on top of things day in and day out to secure the deal, operate it well, sell it at the right time for the right price.
I want to ask you a little bit to pivot. You mentioned earlier on in an episode, right, that something along the lines of raising funds as a security broker. We have
Right.
someone talk on syndications back. Actually, my very first interview was my old real estate coach. She also had a syndication business that she had on the side, which is now has now turned into her main focus. So she had to leave real estate coaching actually, but she never mentioned anything about securities brokers. What is the difference, I guess, there? So you can break that down not only to my audience, but to me, what's the difference there?
Okay. So when you take a deal like this and you divide it up into a bunch of little pieces and let people invest funds into it for the promise of a return, the expectation of a return, that's now deemed a security. And the moment you turn something into a security, you're now under the oversight of the Securities and Exchange Commission, the SEC. And the SEC has a ton of rules about who can raise money, how they can be compensated for raising that money. And so 2017, 18, 19, the capital raising scene exploded. And I was certainly part of that. And the rule was, and is, you cannot be compensated as a non-licensed individual. You cannot be compensated as a percentage of the dollars that you bring into the table. But yet everybody's getting paid a percentage of the dollars they bring to the table. And so it was this kind of funny business going on. And you could kind of work your way around that by saying we're part of the general partnership. We would get ourselves written into that part of the agreement. We're providing due diligence and marketing services beyond just the capital raising. We all got letters. I mean, I think the entire industry did in 2020 from the SEC saying, we're on to you. It was right. I mean, like a week before COVID it really hit. Things were starting to get a little weird out there. We were hearing about things going on in China. What's this going to do to U.S. real estate? And then we get these letters from the SEC like, oh, okay, we better take a step back here and make sure we're all good. And we had our securities attorneys looking at our deals and advising us, but we just took that to mean they're not happy with how this is done. This is not going to end well for people who are trying to skirt around that rule of how you're compensated. And so we've just made the decision, let's go the broker dealer route. These are securities. We don't like the idea of having kind of do funny things in the general partnership documents. So let's just make it super clean and simple. So we had to go find a broker dealer to sponsor us. That worked out really well. I had to go take a couple security study and then take some securities license exams. And now I'm a licensed representative of broker dealer, which means I'm held to a higher standard. I can only take funds from an individual after I know them well. And I have an expectation of an understanding of this potential investment is suitable for their situation, but I can be paid simply a percentage of the dollars that I raise. And so my agreement with the operator teams is very clean, very straightforward, fully disclosed. The investors know exactly where I sit and how I get paid. And so it's just no more monkeying around, no more having to worry, what is the SEC going to do here? We have seen them end up pursuing some charges with some people who are doing it the old way. This is not the technically correct way. And so for me, it just helps me sleep better at night. Our broker dealer has his compliance department, keep me out of trouble, make sure that we're doing things on the up and up. It's another level of confidence that I can offer to my potential investor saying, I'm held to these standards. And so for me, it's just a more comfortable place to sit.
Yeah. And I want to kind of ask you, right? You mentioned no more monkey business. What else good should you look out for actually when getting into a commercial real estate deal, whether it's you're joining a team or maybe it's whether you're investing in that deal yourself? Like what things should you look out for? What are the red flags?
I'll tell you, the first deal, I wanted to learn how these things worked. And I didn't want to go get a job for somebody. I was just at a different stage of life. I had some funds. And so I invested with a general partner where I was just one of the passive investors, one of the limited partners. So we put in our funds. It was supposed to be, we were a 2-year deal. 5 years later, I'm still in that deal. It went horribly wrong. And so I learned the types of deals I'm not going to invest in and I'm never going to offer to my investors. It was a deep value add, meaning not a war zone property, but it needed a ton of work. And it was an operator team that I think was a little too aggressive, really liked these really in trouble properties and had made money doing this type of model, but had lost money on several other deals in the same exact model. So it's just higher return, higher risk type of a conversation. there was a new development aspect to it. It was 2 hours south of Houston, right there on the coast, right there in Hurricane Alley. So everything that could have gone wrong with that one did. The zoning on it was wrong. The general partners were not getting it. We're not filing for the correct permits. And so what I took away from that is no deep value, no Hurricane Alley type purchases, and no new development. I'm not interested in those. It's so easy to make money just doing a slight lift. Take something from a B- to a B, a C- to a B-, a C+ to a B. There you go. You got it.
Yeah.
Those incremental upgrades. We're not buying war zone or 50% occupancy type buildings. We're buying stuff that's 90% occupied and doing well. We just know we can go in there and make it do even better. And there's so much upside just from that. And because it's already performing that well, month one of ownership, we're all starting to receive cash flow because it's operating well, right? We're buying a currently performing asset that's going to generate cash flow from month one of ownership. So lessons learned is just, you got to pick your poison. Are you comfortable with those deep value add, higher return, higher risk type scenarios, or not? Do you want something a little bit more predictable, a little safer, less risk? And make sure that operator team has a lot of experience in doing exactly what you're talking about, and that they've got a really clean track record.
Amazing. And so you've been dropping gems this entire episode. You've really broke down commercial real estate. You helped to kind of understand the jargon. You helped us understand how could even someone in our shoes get started in real estate in the commercial space, even without any much experience. And you shared with us your stories from both the investor side of things, yourself, and actually being in it and being one of the partners that is part of the deal in the fund managing or relationships part at least. And so where can we find you at? Where can we connect with you at? Whether we wanted to invest with you or whether we just want to learn more about the real estate investing process with syndications, where could we find you at, Brad?
Well, I appreciate that. And I feel like gave you a lot of long-winded answers, but it is, you get me going, man. I just start talking. It's fun for me to talk about. And it is, I've got a weird background, but I appreciate the opportunity to share some of those nuggets. Best place to connect with us is at sugarhouseinvestments.com. That's my firm where we help potential investors learn about the deals that we put out there to our investor community from our operator partners. And again, I'm happy to just chat with people. My whole job is to educate, to share information, and whether I'm happy to do that with somebody who's got money to invest today or not. So I'm always happy to have those conversations. And if anybody's in Boise, I'm happy to go grab lunch anytime as well.
All righty. And so now it's time for our final 4 questions. We actually have a bonus question today that I wanted to ask you for the very first time. So without further ado, question number 1 is, what is the most impactful lesson you've learned in life?
I don't think it's cliche yet, but it's a well-known statement. If you help enough other people get what they want, you will in turn get what you want out of life.
That's exactly right.
And that's so impactful. It's you can come at life from a selfish perspective, or how do I help other people type of a perspective. And yeah, when you're out there helping people accomplish their goals, it's amazing the returns that come back.
What is the most admirable trait a person can have?
Loyalty. I'm big on loyalty. Sticking by your friends, sticking by your family, not talking crap about the people around you. For me, it's when I see that the consistency out of somebody from holding up their end of the bargain, getting your back. That's huge.
Yeah, a rapper I listen to by the name of 21 Savage said he'd rather have loyalty over love, because you could love someone and still stab them in their back, but you could hate somebody and be loyal to them and you'll never do wrong by them, right? Because that loyalty. And then if you had to change someone's life with one book, what would you recommend?
All right, I'm a religious guy, so I have some scriptures in mind.
Alrighty,
but
I won't
go there.
No, talk to me. Shoot them out. What you got?
Well, I'm a member of the Church of Jesus Christ of Latter-day Saints. For me, I'm a lover of the Bible and the Book of Mormon. Those two help me more than anything else. Those are the ones I'm always going to help me get to know who I consider my savior, and frame how I live my life.
Amazing.
So thanks for letting me share that.
Yeah, of course.
I would say is outside of the religious text, psychology of money is a big one. That's just down to just the basics. How do you think about money? How do you think about saving? How do you think about earning? And that one can be really impactful.
Yeah, definitely. And what is the legacy that you're trying to leave behind?
For me, it's all about my kids. I've got a 6-year-old boy and a 3-year-old boy. Things were tight when I was growing up. I remember driving up to college in my little $400 dinker car and not sure exactly how I was going to buy groceries when I got there. So I'm thinking about how do I make sure my kids don't take anything for granted, but also have a little bit more level of security as they start thinking about what they want to pursue, and having the ability to have conversations with them about goals and potentials and career choices. That I just didn't have that with my books. So thinking about the impact I can have. I'm not, my name's not going to show up in Business Week and Wall Street Journal. I've given up on that.
Yeah.
But if I can leave with my kids thinking, hey, dad spent a ton of time with me, gave me some good life lessons, set me up well to blow me away. I want them to blow way past me and accomplishing their goals. I'd be thrilled.
And for anyone that's looking to start their walk to wealth today, what is the most practical advice that you could give them?
Real time learning. The college classes can be college courses, great, but the stuff that happens in real life on the street, day in and day out, is huge. The more you can get yourself inserted into the conversations that are happening today, the deals that are happening right now, the money that's passing back and forth, how those conversations are going on, that's happening at your local meetup groups. That restaurant down the street from you tonight has a meetup. The 50 real estate investors are going to be showing up there. Go in there and just learn those conversations. There's a ton of real estate conversations happening on Twitter every day. I love hanging out in those conversations. And put yourself out there, learn that jargon, offer value where you can, but just get yourself inserted. We've all been the shy, I don't know a whole lot, I don't know enough to contribute guy, right? Or gal. But just put yourself out there. And there's so many people willing to help. So yeah, just don't be afraid of not knowing. You can admit that, go in willing to learn, and you'll find so many people are willing to help out. Just get yourself inserted into those conversations.
Amazing. And Brad, I had a pleasure and an honor just getting to have this conversation today and breaking down a lot of this commercial stuff, because it does get a little technical sometimes. It gets a little complicated to try to understand some of the times. But I appreciate you taking the time and just to provide this value to not only me, but to my audience as well.
Thanks, John. I appreciate it. And again, if a dummy like me can do this stuff, anybody can do it. So yeah, there's some technical stuff in there, but it's what I love is you can simplify it really down to the nuts and bolts, and almost anybody can do really well in real estate. So anyway, thanks for the opportunity, and thanks for having me on, John.